Hi, guys, and welcome to another episode of Finance for Founders, the podcast where we uncover the financial strategies and leadership insight that drive business success. I'm thrilled to have Ryan Chenier with us today. Ryan is the CEO of Mastery Fractional CFO Services, a company dedicated to helping small and medium-sized businesses unlock their full potential with executive-level financial leadership without the cost of full-time CFO. With a career spanning over 2 decades in leadership, business development, and now entrepreneurship, Ryan has become a trusted advisor to founders looking to scale profitably and gain financial clarity, and ultimately achieve their vision of success. His innovative approach to fractional CFO service has transformed businesses, helping them to align financial strategies with operational goals, navigate complex challenges, and even prepare for high-value exit. Today, we'll dive into Ryan's journey from corporate leader to entrepreneur, the financial blind spots most founders don't realize they have, and actionable advice you can apply to your business starting today. Whether you're a startup founder, a small business owner, or a CEO looking for financial clarity, it is an episode you won't want to miss. So with all of that said, Ryan, you are welcome to our podcast. How are you, Ryan?
I'm very well, Samuel. Thank you for having me on the show.
Fantastic. Did I get your last name right? Chenier.
You got it close. It's Chenier.
Chenier. French, right?
It is French, yes.
Fantastic.
I do not speak French myself, but my name is French.
Fantastic. Canada's predominantly a French-speaking country, isn't it?
There is a large portion of the population that speaks French, and a large portion of the population that doesn't.
Fantastic. Excellent. So what we usually do, Ryan, before we start, we ask a few quick-fire questions. And these quick-fire questions is just really to let our audience get to know you a little bit more. So as we go, I would encourage you to answer each question, spend no more than 5 seconds in each question, so they get to find out a little bit more about you. You ready?
I am ready.
Tea or coffee?
Coffee.
Early bird or night owl?
These days, I'm an early bird.
Favorite book?
Oh, boy. Jack by Jack Welch. That's a business book, so that's my favorite.
Yeah, I've got that.
Okay.
Former CEO of GE,
Yes.
General Electric, right?
Yes.
One word to describe yourself.
Gonna need more than 5 seconds for this one, Samuel. Passion.
Passion. I love that. Favorite hobby?
Boy, these are not 5-second answers. These I got to really dig in and think about this. I've got 2 boys who play role playing games, so like Dungeons and Dragons.
Okay.
And I play those games with them. I used to play them when I was a kid, so they like my my experience with those games, and so I would say that's my favorite hobby at this point.
Fantastic. Beach or mountains?
Mountains.
Favorite tech gadget or app?
ChatGPT.
ChatGPT. Last movie you watched?
I watched a documentary on Churchill. It wasn't a movie, but I know my kids always have movies in the background. My wife has like Harlequin romances. I can't say that I watched any of those things from start to finish, but I did watch the Churchill documentary from start to finish. It was very interesting.
Fantastic. Favorite cuisine?
Eggs.
Eggs. Okay. One thing you can't live without?
Guessing food or water don't count as answers here. Contact lenses.
Contact lenses. Okay. Are those your natural eye colors?
My natural
eye color.
Yes. Yeah.
Fantastic.
Yeah, but I can't stand wearing glasses though. I don't like to have anything on my face ever.
And what was your first job?
When I was a kid, I used to go door to door pulling the lawnmower in the summertime to cut people's grass to make money. So that was real money. So it was a real job in my estimation.
Fantastic. Excellent. So for our audience, there's a little bit about Ryan. And so now we're going to go straight into the questions now. Yeah. And the first question I want to ask you, Ryan, is You started your career. You went from corporate leader to fractional CFO, which is fascinating to say the least. What inspired you to take the leap and start Mastery Fractional CFO Services?
When I was a kid, I was very entrepreneurial. So that's a very true story. As I grew, I was going door to door, helping people do odd jobs when I was 8 years old, 9 years old. And as I became a teenager, I got a group of friends together, and we were doing that on a regular basis after school and on the weekends. And I made quite a bit of money doing that. And I helped my friends make money doing that. But then after school, I went into university and I focused on my studies. And then after university, I was told the best thing to do is to get a job. And so I did that. But over the years, while I was working in the business world, it became a bit of a gilded cage or a fur-lined trap. I was making good money and I was learning great things. And so all of that was interesting and I stuck with it. But I always had the entrepreneurial spirit, and it wasn't fulfilled by being an employee for somebody else. Boy, back in the early 2000s, I got a role in a large logistics and transportation company, and it was fantastic. I really enjoyed it. I was doing a lot of traveling and working with some really large clients, and I felt like I was providing a lot of value, and I was learning great things. I was working with some great people. But I was living in Winnipeg, Manitoba, which, if you don't know the geography in Canada, that's right in the center of Canada. And the largest populations centers in Canada are not in the center. So Vancouver on the west coast is a large population area. Montreal and Toronto in eastern Canada are much larger population centers. Winnipeg isn't a center of business. And so the company that I worked for was acquired by a company based in Toronto, Canada. And that company wanted me to move to either Toronto or Calgary. That was where their vision was with respect to having their key people located in those areas. And I didn't want to move there. I've got family, I've got roots in Winnipeg, Manitoba. And this is before COVID, but it came down to, okay, if you don't move, then we're going to part ways. And so I took a severance package from that company and decided that that was the perfect time to do what I always wanted to do, begin my own business in a professional way at an adult level. And so I took the leap and I began what at the time I called Mastery Bookkeeping and Business Consulting. I later changed the name to Mastery Fractional CFO Services. My intention was always to provide CFO services on a part-time contractor basis to small and medium-sized businesses that had strengths and that were growing, but that needed support on the financial side. And I figured by understanding their business from the financial point of view, I could really give them the best consultation, the best advisory services possible, and really help them achieve their vision of success. And shortly after I began the business, COVID started, the pandemic. And so it was an interesting thing that really helped my business and helped me, because before COVID, I was going to people's offices. I was focused mainly in Winnipeg. I was bringing my laptop and sitting down and trying to help people, and it was good. But then with COVID, people became much more open to doing everything online, 100% online. And I made the shift. I found it was fantastic because I was able to work with clients right across Canada, and I even had some clients elsewhere in the United States. I had a client in Africa, and I found that the sky was the limit. And so I doubled down in terms of what my expectations were from the business and what I wanted out of the business. And here we are today. I've been growing the business. I'm scaling it. I've got employees. I very much enjoy what I do. I'm helping businesses more and more, and been fantastic. I feel like I'm learning as much as I ever have, Samuel. When I was in the corporate world, I was learning a lot, but doing what I'm doing now, I feel like a kid back in university. I feel like my brain is growing every day, and I just love it. There's a lot that I know, but I'm learning more and more, rounding that out, and it just feels fantastic. I don't feel like I'm ever going to want to retire because I'm having too much fun.
Fantastic. What were you doing in your corporate job? What exactly was your corporate job?
So my role was very much an account management sort of role. In our business, we provided all kinds of transportation and logistics services, but we focused on dedicated transportation, so dedicated trucking solutions. So my role was to work with prospecting clients in different parts of Canada. These clients could be international, multinational corporations, but they had operations in different parts of Canada. And so what I would do is work with their senior team to analyze their total cost of transportation or total cost of logistics in a given geographical area in Canada. And by virtue of having them piggyback on my company's infrastructure, we would put together proposals to reduce their overall cost of logistics. And so I was working very closely with our finance team, my company's finance team, and very closely with their operations and their finance team to build these business cases that were very much very much they would be boiled down to numbers on a spreadsheet. But putting that all together required that I had business knowledge, business acumen, an understanding of the financial details, and that I was able to speak the language of the finance teams on both sides. I've got a Master's of Business Administration degree from the University of Manitoba in Canada, and I really enjoyed taking that degree. I took a lot out of it. I learned a great deal from the education that was provided to me, but I also mixed it with the experience I had. And so I was able to play a multifaceted sort of role at Canada Cartage. And I would manage teams on a cross-functional basis, on a project like basis. Whenever we had a client that we were implementing, we were, for example, taking on a brand new client in one of the major centers in Canada. I'd be working with our finance team, our implementation team, our operations team, our human resources team, and managing the implementation and the startup of those projects. And then once they were underway and then things were in a steady state, I'd be managing the relationships with those clients. And again, being a key liaison between their group and our team as well.
That's amazing. From what you said, you started off like an account manager, business development, so to say, and being a CFO bookkeeper seemed to be a far cry from what you did. What drove your passion for bookkeeping, and how did you make the transition?
Well, the best way to put it is like this. In the early 2000s, I looked around and I had, at that point, I already had quite a bit of business experience in different roles that I had played throughout the 90s. But I really saw that accountants were beginning to play a more significant role in all of business. And as I was working at the company I'd worked at in Canada, the transportation company, I could really see how accountants were becoming more of an integral part of how business was being done at our company, but also how business was being done at the companies with which we dealt with. And for me to be able to provide the value I was able to provide to my company and to our client companies, I needed to be working with the accounting team all of the time. So I understand debits and credit. I've always understood debits and credits very well. And I've always been able to read financial statements. It's just a part of what I've been interested in. But being able to start to connect and operationalize the financial statements and work back and forth between operations and finances and make sure that you could draw the direct connection between what are the leading indicators on the operational side, what's causing the financial statements to look the way that the company wants them to look, what are the leading indicators, and then that's on the operations side. And then on the business development side, obviously there's things that happen there that drive the financial results that the accounting teams were always looking for. I saw with my experience and my capabilities the ability to work with a small and medium-sized business to really help them, because in a large company, yes, there's lots of accountants and yes, they're becoming more and more involved for good reason. It's even more the case today than it was 20 years ago. But when you're looking at a small to medium-sized business, the issue there is that they don't have a chief financial officer. That role is $250,000, $300,000 a year, call it American dollars. I know that not all of the listeners here are Canadian, that's for sure. So a CFO role, a full-time chief financial officer, is not affordable. It's not within the budget for most small and medium-sized businesses. At the same time, if you don't have a chief financial officer in a small to medium-sized business, and you don't have somebody who's particularly fluent in the financial side of things, then you're missing out on a tremendous opportunity. And I find that that's the case. I see that all of the time. As small and medium-sized businesses, there's some very smart people working there, and they've got a real handle on the operations part of the business, less or so on the business development side. They aren't necessarily expert at marketing and sales, but where they're really struggling or where they really don't have a lot of knowledge is on the finance side. And so there's a gap there that I felt that I would be able to fill and help these businesses align their vision of success with actual results on the financial side. And so that's how it came together for me. I saw that as being a real potential need, and I knew I was able to fulfill that need. And so I went out to the market and started to talk to different businesses and found that absolutely that was the case. And when I work with them, there really is a whole bunch of low-hanging fruit, but even on a long-term ongoing basis, in working with these companies, I'm not full-time, but I'm able to provide the tips of the iceberg for them. The most important things that they need to understand with respect to their finances, the most important things they need to do to help manage their business from a financial point of view. I'm able to provide that on a part-time basis, and it's way more affordable. It's incredibly affordable relative to not just a full-time chief financial officer, but it's even more affordable than hiring a junior full-time accountant. And you're going to get results that a junior accountant's never going to be able to provide you.
To our audience out there, would you give a brief description of exactly what a fractional CFO actually does? And that's for our audience that do not necessarily know why they should hire a CFO and what is the purpose of a CFO.
Yeah, I can do that. So again, just to frame it up properly, a chief financial officer is an executive in a large company that looks after the finance and accounting department in collaboration with the operations part of the business and in collaboration with the sales and marketing part of the business. Generally reports to the CEO or president or owner of the business. And in a large company, that person plays a very integral role. So I like to describe it as every business is a little bit like a three-legged stool. Okay, so you've got three legs on your stool, and those legs are sales, marketing, operations, and finance and accounting. If in a smaller business you don't have the finance and accounting leg that is stable, then your stool isn't going to be very stable. And so a fractional CFO is providing to a small and medium-sized business the same things a full-time CFO does to a larger business, but they're providing it on a fractional basis, which means it's part-time. It's on a contract basis, meaning I'm not an employee. A fractional CFO is not typically an employee, but the person is working with a multiple client base. And for those different clients, I'm bringing to the table executive level experience, management. So I'm actually overseeing and managing aspects of their business. Advisory services. I'm working with the CEO or the owner or the president, and in some cases with other key stakeholders in the business, like the chief operating officer or the vice president of sales and marketing, whoever the key stakeholders are. In some cases, I'm working with the boards of companies, and I'm helping them interpret their financial statements. I'm helping them make sure that they've got good financial statements in place. I'm helping them understand what the trends are, what the baselines are telling us, and I'm providing insights regarding opportunities for improvement. For every different business, it's a little bit different where the focus needs to be, but there is definite focus on making sure that you've got good processes and systems in place to manage the record-keeping component of the business. It's important to make sure that the information is being reported on so that the key stakeholders in the business have at their fingertips information that they need to know at a moment's notice regarding the financial part of the business. It's also somebody who can respond to questions or queries, specific questions or queries. My team and I will do some of the heavy lifting as well. We're not just consulting or coaching or training. We're actually working on budgets. We're working on forecasts. We're helping to go over the numbers. And because of the fact that I've got a team that I'm working with, we're operating at scale, So in some ways, I'm bringing to the table more than a full-time CFO would. It's on a part-time basis. We've got investments we've made in technology. We've got capabilities with respect to that technology. We're very proficient in a variety of different software that we bring into each client's business, and we help them manage vast amounts of information quickly, come up with really insightful inputs, and understand, hey, if we made a change here or there, what would the impact on the financial statements look like? Would one of those changes be better than the other? So we're looking at financial planning and analysis. We're looking at management accounting, gets to cost accounting, understanding what pricing's like, looking at gross profit margin by product or service type and where it makes most sense to make future investments, paying down debt, raising funds. There's a lot that goes on. It's a big job description, so it's hard to summarize in a short period of time, but that gives you a flavor. And I suggest that if anybody's in a position where they want to understand more about what a fractional CFO could do for their business specifically, there's different resources that you can reach out to. You can Google it for one thing. Certainly, Samuel, I know that you're in a position to answer some of those questions, as am I, and we can always be found online, of course.
Absolutely. You mentioned before that a full-time CFO could be about £350,000.
Or more, yeah.
Dollars or more, right? It's pretty much the same over here in the UK, especially when you convert it more or less what you just said just now. Working with a fractional CFO, how much is it likely to cost a startup to hire a fractional CFO?
It can vary widely. So I think it depends on the specific firm. If there's a fractional CFO firm, they might have a cutoff or a minimum amount, or there might be a size of business that they want to deal with, and they won't deal with a business that's any smaller. I have some clients that are smaller now than I would. They're relatively small compared to new clients that I would entertain. And that's because I've had them for years, and their growth targets are small, and I've got one or two family members that I'm helping out. But I think that in general, what you're looking at is ideally, if your business is between, I'm going to speak in terms of dollars, it's not a whole lot different in terms of pounds, but you've got to be $1 million or more in annual revenue, generally, typically, to really get a good return on investment from what a CFO can provide you. But that it does depend. A smaller business that doesn't have an insightful bookkeeper, or that doesn't even have a bookkeeper, that needs to get a handle on the finances, they might want to talk to a fractional CFO just to get an idea of what their next steps might be. They might be a little bit too small to deal with a fractional CFO, but I'll often speak with smaller companies like that to put them on the right track, to get them set up with some of the initial processes and software they need to have in place. If a business is planning on growing quickly, then if they're smaller than $1 million in annual revenue, I'd love to speak with them as well. I don't generally personally like to deal with pre-revenue companies. So companies that are in the process of putting together a business plan and raising funds, but they haven't yet developed revenue. That's not my scope of work. That's not my lane. Now, there are some fractional CFOs who will work with companies like that, and what they charge them, it depends. Sometimes they're looking to receive an equity stake from a business like that. So the charge is $0 or £0 or €0 or what have you. In my case, the minimum charge is, and I'll tell you, I break it down, and I think a lot of fractional CFOs do this, but I have 3 different service packages. One's very basic, so I'll give you the bare minimum, the bare bones, what you need to have. That's the basic package, and that's going to cost a little bit less. Then I have a core package, which is the fundamental key components that I recommend that every company have in place on a monthly basis. So it's budgeting on an annual basis, it's rolling forecasts, it's management accounting, regular reporting, all that kind of stuff. That's the core package. And then there's more advanced packages where I get into scenario planning, if-then analyses, various versions of budgeting, more in-depth meetings more often, that kind of thing. And that's more expensive. At the very low end, $2,000, I would say, is probably about right, depending on the needs of the company. But honestly, Samuel, that could depend on fractional CFOs and exactly what their scope of service is, because very much the scope of service is a key component here.
Yeah.
Yeah, it's what we're focusing on for each client. And for some clients, the scope of service is much more narrow, so it's going to be a lower price. And then for others clients, it's more intense, and so the price is different. Is that a fair answer? Does that get at what you're asking?
Absolutely, okay. I agree with that. If a company comes to you now and says that I want to scale my business, right? What are the top financial levers founders should focus on, or you would encourage them to focus on?
It depends on the business, but I think that the top ones are, number one, revenue generation, business development. I mentioned small and medium-sized businesses. Often business development is the bottleneck in the business. Okay, so if a business is over $1 million in annual revenue, $2 million, $3 million, $10 million in annual revenue, they've got a strong operation. They wouldn't be at the point they're at if they didn't. They've got some strength on the business development side, on the sales and marketing side, or else they wouldn't be at that point. But at the same time, if they're wanting to scale, they have to increase that. So they have to do better. They have to generate more revenue than they have in the past. And unless they've got a queue of clients and customers waiting outside their door, they need to become better at raising that revenue, generating revenue. In some cases, it's a bottleneck. The bottleneck is somewhere else. It's a capacity issue. We don't have the capacity to fulfill more clients or to fulfill more sales. Often that'll be the case for a short period of time, and then the company will hire more employees, they'll buy more equipment, they might change facilities, and suddenly they've got more capacity again. And so now they want to generate more revenue. So if you're looking to grow, to scale, that's one of the key levers is revenue generation. Capacity to fulfill that revenue is obviously one of the things you want to look at. And so with respect to capacity, it can be a matter of utilization. Can we get more out of our facility? Can we get more out of our equipment? Or maybe a matter of efficiency. Can we get more out of our employees? Can we do something with respect to our processes or our systems, like the information technology that we have in place? Or is there something we can do from a management point of view to try to help our employees produce more of what we want out of them, given the resources that we have in place? So it's a matter of those main things: revenue generation, efficiency, and utilization. Those are the main levers that I would tend to focus on, but you can dial in on any given company and find a few others. I would say that that's one of the keys you want to do, is look for those levers. What are the main things we can do? if we make a 1% difference in any one thing, let's try to quantify what would that 1% difference do?
Yeah.
If we got 1% more utilization out of our facility, what would that mean? If we got 1% more utilization out of our employees, what would that mean in terms of the impact on the financial statements? That's number one question. Number two question is, how many percentage points can we realistically get in the next period? Like if we can get a massive return on 1% investment in efficiency from our employees, but our employees are already maximally efficient. There's not a whole lot we can do there because we just focused on that last year. And we might want to shift our focus somewhere else where we think there's an opportunity to generate more of an impact on the financial statements. And some of this stuff, I mean, I hope I'm not losing anybody with respect to the way I'm saying this. It's really nice when you can put this on in reports and on spreadsheets, and then you can lay it out and show people. So screen sharing is one of the greatest inventions that has ever been, in my opinion, because I use that a lot with my clients to help flesh out these ideas and explain these ideas, because that's one of the number one jobs of a fractional CFO is to take complex financial concepts and put them into easy to understand format for other business executives to understand and use effectively.
Spot on. I think that revenue, your margins, everything you've just mentioned just now, I think are all relevant or needed when scaling the business. Very often I get clients that are starting a business, they want to scale their business, and some of the questions I'm almost shocked at. What would you say is the most misconception you've received from an entrepreneur wanting to grow or scale their business? Maybe an unrealistic expectation, or, we see all these things in these movies about scaling a business and having an organization, global organization, and so on and so forth. What would you say has been the most easily myth that needs to be debunked?
I hear some crazy things from clients. There's a variety. I think that to be useful, I would say that one of the common denominators I could identify is that businesses, like a lot of these business owners and entrepreneurs, are very visionary. They've got these great ideas, and so they want to actualize their ideas, and I support that 100%. Part of where I can be of value and fractional CFOs can be of value is you take that vision and you have to translate it into numbers. You got to say, well, what you're talking about there, let's put that on a spreadsheet. Like let's say, what do the financial statements need to look like in order for that vision to be realized? When will you know that vision has been realized? Like, let's imagine what those financial statements look like. Because if you can do that, then you've got a roadmap. You know where you want to go to, and you can figure out where you're at based on your current financial statements. And then you can plot the course, and it won't be a straight line. It'll always be a curveball. But a lot of these entrepreneurs, a lot of these people who want to scale quickly, they don't even know where they want to go. They have ideas, but they're flashing in and out, and they're changing all the time. So that's a common denominator, is that some of the most influential business people I've met, it's hard to pin them down. Like one minute they're talking about this, which looks, that the financial statements that would be relevant in that situation are call it like so. And then the next day you're talking to them, they've got these different ideas, and suddenly it's a totally different set of financial statements, which would require a different roadmap, and which would require different strategies, and you'd have to execute upon the strategies. So getting them to pin them down a little bit, and not to say that you can't change your goals, but you have to understand, you have to do that. You have to turn that strategy into numbers and recognize that those numbers will form a bit of a framework, or they'll be like a skeleton for you. And you can put flesh on the bone, but you need to connect the dots properly. And sometimes those dots are disconnected. Oftentimes those dots are disconnected with the people who want to scale a lot. They need to put it, and so that part of what we do, we provide that discipline, and we provide that framework, that financial framework for them. And if you can get that happening, and that's what we do with our clients, is you get a lot of synergy, and it could be a fantastic thing.
I love that. I saw something the other day, and it said that data shows that the people that weigh themselves the most are the ones that are most likely to lose weight. You're probably wondering, what am I asking? There's a common saying, you cannot manage what you don't measure.
Yeah.
So now in this industry, startups, fractional CFOs, we're talking about metrics. My question is, for a company wanting to start up, what are the kind of metrics they should be looking at? Is it even important? Who is it important for? And how does one go about implementing it for their business?
it's, in my opinion, is one of the more important things you can do is look at your metrics. Now there's financial metrics. So I call them key performance indicators. It's a common term, but you want to look at financial key performance indicators. For different businesses, it might vary, but revenue, net profit, gross profit, cash in the bank, those are some main financial key performance indicators. Depending on your business, if you've got a SaaS business, there's others that are very fundamental. But the financial key performance indicators generally are lagging indicators. So I mentioned earlier, there's leading indicators. It's important to get an idea or to get a handle on what your leading indicators are. What's important for your business? So on the business development side, what does your sales funnel look like? What does your sales pipeline look like? What things need to happen for you to go from no clients, nobody knows about you, to, okay, here's a client. Do you attract people with advertising? Is it cold calling? What is it? And how do people go through your sales pipeline? What are the steps? What are the conversion rates at the different steps? On the operations side of things, same thing. You want to look at what are your key performance indicators? What are your efficiency metrics? And a lot of companies will have management software or enterprise resource planning software that provides them with metrics. They need to be using their software properly. But as a fractional CFO, I often encourage them to begin looking at the metrics there if they're not already looking at metrics. We want to identify the key metrics, and then, because those are drivers of the financial key metrics. But yes, I don't want to go on too much of a tangent here. I think if you want to lose weight, you got to weigh yourself every morning. It'll tell you the truth. Did you have a good day yesterday or not? Right? And that's very much the same with business. On the financial side, absolutely. How are we doing? The more often you look at it, and the more often you try to figure out, what are we doing right? What are we not doing so well? Where's there an opportunity for improvement? The more you're putting your brain to that, the more you're going to start to recognize what actually works in your business, what's working, what's not working, and what should we do now because of that? Or here's another way I like to say it. Question is what? What's happening? So what? What does that mean? Now what? What are we going to do about it?
Yeah, absolutely. Can you share an example of maybe where you've helped someone, a startup, for example, and having metrics has really just changed everything around for their business?
I can give you an example. Sure. So a client we've been working with for a couple of years now. When we first began working with them, they were around $1 million in annual revenue. Now they're over $12 million in annual revenue. So they've been growing a lot, and there have been all sorts of different challenges, but it's been a good adventure with them. In the beginning, they weren't doing any financial projections. So we were trying to get them to forecast and to budget, and budget was changing all of the time. That we couldn't lock them down like I was talking about in my previous example. It was difficult to get them to translate their vision into numbers that we could put down on a piece of paper. We put down numbers, but they were constantly just wrong, way off the map. They'd changed too much. And so the company began to run into cash flow challenges, which often is the case if you're growing quickly. Cash flow management becomes a key component of the business. So we worked with them in the early days to manage their cash flow, and they took a few pokes at it, and it was very, very tough to get them on track. And they didn't do it enough in the beginning, and they started to run into some real problems. So the situation, without giving away too much of the details that they probably wouldn't want to share, I'll say this, that they got to the point where their cash flow was a significant challenge without their cash flow forecasting. So we got them cash flow forecasting properly using some software that we brought to the table. It automated the process a bit more, gave them a lot of visibility and the ability to plan ahead better. They themselves recognized that, yes, we need to do this. So they put in the time and the effort, and we were able to execute upon a proper cash flow management process. That was a huge, huge win. Huge thing for them and a huge thing for us, just because we wanted to get them to move to that stage. But also we have some business valuation software that we can bring to the table for some of our clients. And I think that in that business, the team that was in place was starting to feel a little bit panicky regarding their investments. There was different shareholders who had invested in the business, and the cash flow didn't look great. The profit wasn't great. And, a business that doesn't profit in the first couple of years, that's not necessarily a bad thing. They could be at the bottom of what I call a J curve, or what's commonly called a J curve, where you have to make investments in the infrastructure and the capacity of the business before you're actually going to be profitable, before the revenue starts to come in and offset your break-even point. But at those times when you're at the bottom of that curve and the cash flow doesn't look good and the profit looks bad, people who invested in the business might start to feel not so good. We, in that business specifically, I worked with the CEO to put together a valuation of their business. I'm not a certified business valuator, but we use the software to do it. It's relatively accurate, but it really helped because it outlined for them how the business was being evaluated and what value the business had, even though it was in a negative cash flow position and a negative profit position. I think that helped alleviate the concerns of a lot of the shareholders because it was a positive, it looked very positive because of the fact that the business was generating a lot of growth, a lot of revenue. And yes, managing the cash was a challenge, but a lot of cash was flowing through the business. And that was part of why the business valuation was higher than I think a lot of the stakeholders recognized. And so after we put that in front of them and we did some reporting and we got them doing forecasting, I just went through a large planning and analysis exercise with them for 2025, 2026, and 2027. So the three-way forecast plus this business valuation, I think it really calmed everybody down, helped them focus on what they should be focusing on. And the businesses in the early stages of this year, their fiscal year is actually already passed. They're not on the calendar year, but so far they're in quarter one of their fiscal year and things are looking much better. So I don't even remember what the question was, but that's the answer.
Do you have a go-to tech stack? So when a company comes to you that your bookkeeping softwares, maybe expense claim softwares, forecasting softwares, do you have a preferred tech stack that you go to, or you almost develop it based on the customer's needs?
Yeah, it depends on the customer's needs. A lot of my clients are using QuickBooks Online.
Okay.
And I recommend to my clients that they use Dex Prepare for receipt management and bills and supplier invoices, and they can do other things as well. It's more functional than the QuickBooks version for receipt management. There's more to it that can help on the efficiency side of things. Beyond that, I'll use Google Sheets and obviously I use AI, and I've got some planning and analysis software that I bring to the table. I've got the business valuation software that I use. But I will build it for my clients and I'll also price it for my clients. Some clients don't require all the different software that I can offer them, but I'll tailor a solution for them based on their needs. And then as they grow and their needs change, I have that ability to very quickly help them adapt to new software.
Fantastic. I was going to ask you, in terms of the mindset of entrepreneurs. And now, when I say the mindset, most entrepreneurs, most of CEOs want to scale their business. They want a profitable business. How do you manage that relationship as a fractional CFO and a CEO of a company? How do you manage that relationship? Because historically, or let me not say historically, there's a myth, there's rumors that usually the CFO is the most cautious one. The CEO wants to drive sales, wants to grow and everything else. How do you manage that relationship?
When I'm working with the CEO of any company, one of the things I try to establish up front is that, hey, listen, this is your business. I'm a fractional CFO. This is your business and you're the boss and you'll make the ultimate decisions. But I want you to ask me any questions you've got, and you need to know this. I'm going to come to you sometimes and say, you may not like this, but you need to understand this. And I'll tell you the hard news. I can't just be a yes man in this business. I need to be able to tell you when you're charging into a wall, you need to know that before you get there. And that's part of what I'll try to do is make you aware of that. Okay, so now once we understand that, the next thing is that, and I don't always get immediate compliance to this, but I'll say, listen, I'm going to give you some really good advice, but we need to, I'll help you with the strategy, the financial strategy. I'll even put together an initial proposed strategy, and then we can play with that. That'll be your draft. But ultimately, we have to execute upon that strategy, right? Like we have to follow through. And when I say we, I mean you too. Like it can't just be me, because I can only help you so much. You've got to help yourself. And part of any financial strategy is putting together a budget. And the budget is going to provide the guardrails for the business. It's going to tell you, like, if we have a good budget in place, I'm going to know, and you're going to know in advance before you get there when you're heading into the ditch. And also, if you're like doing incredibly well, we're going to be able to know that in advance too. And we maybe want to make changes to the budget to allow for more growth than we may have originally planned, or whatever the case may be. But that budget is going to be effectively our roadmap, and we have to follow the roadmap. You know, if you want to go hard left for some reason, we have to look at what's down there first. Let's create the map for that. Let's build a rolling forecast that shows this scenario that you've got in mind. If I can get them to do that, to start to work with those projected financial statements, it really helps so much. I don't think it's a challenge anymore. The challenge is when I can't get them to do that, or I can't get them to spend the time focusing enough on that. And don't get me wrong, one of the big things I do for my clients and fractional CFOs in general do for their clients is they save their clients time. This is not a matter of, hey, I want to soak up a whole bunch of your time. No, it's not that. It's, I'm going to save you a whole bunch of time. You're going to leverage your time using me. But, every lever needs a fulcrum, right? Like at some point we have to touch, we have to talk, and we have to touch, and we have to be in agreement. And so, and most people are great about that, because they go, hey, yeah, I want to grow my business and I want to be successful. And so if you're going to help me, that's great. But you have to make it clear to them that you're going to help them, right? You have to help them see how you're going to help them.
One of the things I'm very interested in hearing is how do you go about winning new clients? How do you go reaching out? How do you position yourself? How can you help potential clients recognize the value that you bring to the table and you would bring to the table, especially for startup founders that can't really differentiate between an accountant and a CFO?
That is a great question, Samuel. And that is probably the most vexing part of this business for me. What I'm doing for my clients, once they're clients, that part, that's great fun and it's relatively easy.
Yeah.
Helping businesses that don't know what a fractional CFO is, that's the hardest part. Now, if they know what a fractional CFO is and why they need one, they've probably already got one. But if they don't, and so my prospective new clients are going to be ones that don't have fractional CFOs already, I have to help them understand what they're missing. And they don't know. If they knew that, if you've got a sore tooth, if you've got a toothache, you go to the dentist. But what if your tooth is rotting and you don't know it?
Yeah.
And somebody says, hey, do you want to go spend whatever X number of dollars and a couple of hours talking to a dentist? They're going to say no, or yeah, okay, I'll do it next week. And it never happens, right? Oftentimes I'll take a new client on when suddenly they get audited by one of the government agencies, or if they realize, oh my gosh, I haven't filed taxes in 2 years. Like that'll be a time when they might come to me and say, it's embarrassing, but, or their bookkeeper, turns out their bookkeeper quits and they realize that the books have been done wrong for, the entire year or something. It's always some sort of event that gets them to come to me. What I try to do to generate new business is I try to get out and speak to people, like I'm speaking with you today.
Yeah.
Talk to them about, what does a fractional CFO do? How can it help your business? What might you be missing? If you're an entrepreneur who's had some success, you've climbed up a mountain, and you've left a lot of people behind. Like you've done things other people won't do, and you've gotten results other people haven't gotten. But there's once, I always like to say it this way, once you get to the top of the mountain, you look around and you go, hey, there's another mountain, and you want to climb that too. If you're focused on growing your business and the operation of your business and even some of the business development, you may not even understand that financially there's a lot of horsepower that could be added to your business. I think I would say to anybody who's a business owner who's thought about hiring an accountant, whether it be a full-time junior person or some business owners, they go, hey, I've got a bookkeeper and I've got a tax accountant. I've already got an accountant. But you talk to your tax accountant once or twice a year, and your bookkeeper is just doing the record keeping. They're not doing financial planning and analysis. They're not any of that stuff. So just I would say talk to a fractional CFO, understand what budgeting and forecasting is all about, and understand that big businesses, they all have a full-time CFO. What do they know that you don't? Look into that, okay? Yeah. And a fractional CFO can help you.
Fantastic. I've got so much questions I can ask you, but I'm mindful of time. I've got some notes, a few questions. I think I've asked you about a quarter of those questions.
Oh, okay.
So what I'll do now, what I'll ask is just for you to give us just some general tips for a business wanting to scale. Before I ask that, I wanted to ask you, when a company or startup joins you for the first time, what is your approach upon them first joining you, asking them questions and aligning it with potentially their targets, and you're now trying to find numbers for those targets? One of the things that you've mentioned before is just aligning their numbers with their goals. So when somebody joins you, what is your process? What is your approach? Somebody sits with you for the first time, you're now about to embark on them on a conversation. What is it that you say, and how does the process look?
Now, is this at the point when I'm first speaking with them, or they just became a client and now I'm working with them on their business?
They've just become a client. So they've signed up and now you're having your first meeting with them.
Okay. Now, at this point, I've gone through my sales cycle is broken down into a few steps. I already know quite a bit about them at this point. I know what their financial statements look like right now. And I'm going to make a few assumptions here. I'm going to assume that number one is they're caught up on their bookkeeping. Okay. And that's not always the case, but I'm going to assume they're caught up on their bookkeeping, and the bookkeeping is relatively good. Like, the information is reasonably reliable. At this point, we know what the trends are. We know what the baselines are, and we've got some insights with respect to what the low-hanging fruit is. So it's a matter of identifying what our next steps are. So I put together a bit of a project plan with them. I like to hear what they think their next focus areas need to be, and I can, in some cases, work with that. But yes, goal setting is a very important component of that first part of the relationship. What are you planning on doing? Well, how much do you want to grow? If you're, and it's not just growing from a revenue point of view. There's different goals we can set. What's your net profit goal? Do you have gross profit margin goals? What's your cash in the bank goal? There's all sorts of different things we can set in terms of goals, but I want to set those out. I want to lay those out with them. And that's a bit of a process. Sometimes we set business goals for the business, but we also set personal goals, because if an owner of a business, large or small, says, yeah, I want to travel 6 weeks of the year. Okay, well, part of what your goals need to include is a structure. Your business needs to be structured so that you can do that.
Yeah.
If you're comfortable working 80 hours a week, 52 weeks a year, then we can look at things a little bit differently than if you need to be away from the business. If you need to be away from the business, you need to set up the business so that it can run itself when you're not there. So what does that mean? Maybe you need a director of operations, somebody who's effectively running the business, and you're overseeing that person, or whatever the case might be. So there's financial targets that we want to set. We want to set some personal targets, maybe depending on when do we plan on exiting the business? Are we going to sell the business? Do we want to bring on partners? All of those things, some of those things are qualitative, not quantitative, but I want to understand what those are too. And that helps me understand, where are you wanting to go? We know where we're at now. And then it's a matter of charting that course, working out what are the key focus areas for the next period? What are some of the things we're going to tackle first? And that really is the best place to start. And from there, it can go in many different directions.
Fantastic. I love that. Honestly, I can sit here and ask you questions upon questions, but I really, really want to take the time to appreciate you, Ryan, for your insight. You're clearly a man that's knowledgeable in the industry with startups as well. I'm sure that would be crossing paths as well, possibly even working together on 1 or 2 projects as well. But do you want to have a lasting comment to our audience, some words of wisdom, so to say, from an experienced fractional CFO?
Yeah. Okay. So I love this. I don't know where I heard this before. I don't think I made it up, but if it makes good business sense, do it. That's one of my favorite sayings of all time. And with respect to a fractional CFO, if you haven't got one, many businesses find it makes good business sense. Large businesses know that a CFO makes good business sense. You owe it to yourself to take a look and figure out if that might be a good part of your company's solution.
Fantastic.
Okay. And Samuel, I want to say thank you for having me on this show. I think that your questions have been very interesting, and I've had a lot of fun here, and I appreciate you for interviewing and working with other fractional CFOs. I think that's excellent.
Fantastic. And guys, remember as well to like, subscribe, and share, and click the notification button, because each week we're releasing new episodes just for you guys. Remember what we're here to do. We're here to inspire you, educate you, and to help you build. So look forward to seeing you all next week. Once more, tune in to us next week, Finance for Founders. Take care. Speak to you soon.